Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 16. And we're going a little bit upmarket today, away from some of the tabloid online news services. We've gone all the way to Bloomberg. And I just wanted to take a look at this particular story because there's been a lot of doom and gloom in the stories that I've looked at in recent times. And I thought it might be about time we just had a look at some positive news. And so today we're having a look at this article from Bloomberg that talks about the commodity crash signals disinflation is taking hold for now. Now, I guess I started these weekly wisdom videos mainly to highlight some of the tactics that the media use to grab our attention, but also the misinformation or the deception in the information that we're getting from the media about growing our wealth and generally just managing money and surviving on a day-to-day basis. So this headline once again uses all those emotive words to get our attention, crash, disinflations, taking hold for now, all those things that are designed to get us to read and delve a little deeper. And it worked. I went and delved a little bit deeper into this one. But I guess the reason I wanted to talk about this one is we're hearing so much, particularly here in Australia, but I know it's also happening in the US, about the cost of living crisis and rising interest rates, rising cost of living. It's all very, very negative. And in Australia yesterday, or on depending on when you're listening to this, but on Wednesday in Australia, the inflation number came out and it actually had increased a little bit. So it's still below 7%, but it had increased about 3 points, so up to 6.8% for the quarter, or for the month maybe. And that obviously led to a little bit of, what does this mean for interest rates? And, are we going to see another interest rate rise? And so all that cycle of negativity continued again. And, people looking for something, for some relief when it comes to the horizon, when it comes to interest rates and their ability to meet their expenses. It didn't really come from those inflation numbers. So I wanted to dive into this article. It's quite a long one, so I'm not going to go into every paragraph. But I wanted to just show you that there is some good news on the horizon coming out of the US and the commodity market. And it's one of those markets that a lot of people don't look at very often because it's just not something that's a feature in finance news stories or updates on a daily basis. They tend to look at the stock market movements and not much else, and currency. Stock markets and currency seem to be the two that they focus on. But commodity prices are something that is obviously a massive factor when it comes to our cost of living and our cost of goods that we buy, because they are the cornerstone of most of the goods that we buy. So in here, we're seeing cost of everything from metals to crops has plunged this year. So again, another one of those emotive words, plunged. But it works because it gets us to have a look. And the key point here is in relation to crops. But again, obviously, any drop in the cost of metals is also good for inflation when it comes to the constructions of all types of products that rely on metals. So economists see inflation slowing, but warn some prices are still pretty sticky. So as we go through, it talks about from copper to wheat to natural gas. Some of the most important of the world's products are crashing. So that is good news for consumers, because if the inputs of all of our goods, the cost of the inputs are falling, then that will in time lead to a reduction in the costs of our day-to-day staples. And I've been arguing and talking about for some time about the fact that the oil price has been dropping dramatically and a long way away from the highs, and we just haven't been seeing that in petrol, or if you're in the US, the gas prices. We haven't seen that showing up necessarily at the Bowser, but it's bound to start happening now that the prices are dropping even further. So as it rightly points out, a lot of this started when Russia invaded the Ukraine. So we saw a lot of price rises and impact through the supply chain as a result of that war. And so this graph is a really interesting one to look at, and it's great that it gives us the ability to see. But you can see through here at April through to July last year where prices pretty much peaked, and then you can see this nice downward spiral, and we're now all the way down here. So this is plunging energy, metals and crop costs could spell relief for consumers. So they're repeating that one, but this is showing you that this graph is showing you quite visually that prices have dropped quite dramatically, and that's a great thing. And so we are, and I'm going to scroll down a little bit further. So this paragraph here is talking about what's happening in the US in terms of inflation, and I think there's a graph if I scroll. Yes. So if we have a look here, so here we've got US, UK and Euro inflation. If you look at those graphs, you've got this really steep increase all the way up here. So from probably a low down in, say, December of 2020, and then it's just been on this rapid rise, a steep curve all the way up to September. But since then, predominantly with a couple of little blips, it's starting to fall or level out. And if you look at the UK, it's dropping dramatically. The euro has dropped dramatically. The US didn't quite get as high as the others, but it's still got a fairly nice flow down. And the red shaded area gives you an idea of the angle or the rate of change. So that graph probably doesn't look the same in Australia. We haven't dropped as far. We didn't probably rise as high, but we certainly haven't dropped as rapidly either. So the US down here at probably around 5%. We're still up here at 6.8 as of the news this week. So it's still looking good though. Things are starting to look better, and that just means more potential for interest rates to at least stay where they are for a little while, so that the reserve banks can get an appreciation for these types of pieces of information and the reaction those pieces of information are having on consumers, because ultimately it's us, the consumers, that they're trying to slow down. So if we stop spending and these graphs continue, then there won't be a need to drive interest rates higher and cause more pain. And that was also borne out, it's not in this article, but it's also borne out by news this week that new building approvals in Australia are at the lowest level in 11 years. So people are not spending, they're not out there buying or building new homes because they just can't make the numbers work for them with the interest rates where they are right now. So some good numbers. Even China, one of the biggest drivers of all of these things because of their huge demand, it's starting to rebound. And nickel's plunged 30%, nickel's down, zinc's down 20%, copper's declined. So all of these things go into lots and lots of products, and that would then result in prices at least stabilising, if not dropping dramatically. There is this statement here, and this one actually caught my eye a little bit. And excuse me, I might clear that one. Stubbornly high grocery bills are still a massive weight on household budgets, and so we are still seeing that around the world. There's no doubt about that. It hasn't flowed yet into our grocery prices. So it would be interesting to see when that starts to come, because as they describe here, as food inflation drops, then that will have a massive impact on those inflation numbers, and we will be able to get some relief when it comes to the interest rates. So, let's scroll through and see if we can, restaurants and retailers, starting to take note. So that's a good thing. Again, if it's getting, more reasonable to eat out, people will do it, which might put pressure on inflation. But, if prices drop, it just makes life a whole lot easier for everybody. So expect food prices to fall over the next 6 months. With at the moment, 6 months seems like a long time, and it is. And there's a risk if it takes that long that interest rates could still go back up at least once or twice more, because they do really want to get that inflation number down quickly. All world economies now seem to have 2 to 3% as their target range. And even at 5% in the US, it's still above that. So it would be interesting to see what policy they take, although they're dealing with their own other dilemmas over there with the debt ceiling and all the rest, which could have massive impact around the world. It appears as though we've averted that problem for now. And I saw this morning in my quick news recap that most economists are suggesting that the deal that was done to get that debt ceiling over the line will have minimal impact on the economy, which is probably good news, and thankful that they were able to come to some arrangement to get that debt ceiling passed, because nobody wanted to go through the pain that would have been caused if it didn't get passed. It would have had ripple effects right across the world and could have undone all of the good work that's been going on in bringing prices down, and probably forced most of the world into a recession. And this article, throughout it, I have read it all the way through, but obviously, because it's quite long, I'm not going to do it here. But this article does still touch on the fact that world economies are still on the precipice of a recession. So it is a delicate scenario that we're facing at the moment. But I guess at the end of the day, what the purpose of these videos is to show you that there is light at the end of the tunnel, and when it comes to investing, a lot of this stuff has very little impact on long-term, buy and hold portfolios, whether it's property or stocks. So this one, I guess, is more about managing your money and knowing that there is light at the end of the tunnel. So if things are feeling a little bit tight at the moment and you're not being able to invest as much as you would like to, here's some good news that hopefully the not too distant future there'll be some relief, and you'll be able to get more of that surplus funds into investing. But hang tight. Positive news is flowing, and hopefully in the not too distant future we'll see that reflected in interest rates. So that's pretty good. This little bit here about greedflation, that's something that is an interesting topic, in that lots of, entities have been taking advantage of the sentiment around inflation to jack their prices. And that's always an ugly scenario. But once prices start falling across the board, they'll be forced to come down as well. And so we'll get that relief. So I'm not so sure that we're in a disinflation scenario at this point, but certainly the pressures on inflation are starting to be relieved, and that's good news for everybody. So hopefully that was helpful. Leave me a comment down below. If you're watching this on YouTube, make sure you subscribe. Click the little bell to get notified when we issue a new one. The subscribe button down below. And if you're watching it on Facebook, leave us a comment, like, share, comment, so that more people can see this. If we can get you guys helping us by feeding the algorithm, more people will get to see these videos, and hopefully have a positive impact on what they're doing with their money management and their investing. And as always, if you want to have a conversation about how to grow your wealth, manage your money so that you can grow your wealth nice and securely and efficiently, then reach out, leave me a comment, send me a DM, find the email address. It's andrew@theinvestorsway.com.au if you can't find it, and just get in touch with us. Let us know you want to have a chat, and we'll send you a link to schedule a time in our calendar. Nothing to buy on that call, just a conversation, just to see where you are, where you want to get to. We'll have a chat about any challenges you're facing, give you some tips on how to overcome them, and if it's appropriate, we'll talk about more ways to get involved with the Investors Way. But make sure if you're thinking about doing something when it comes to growing your wealth, reach out, let's have a chat and see what we can do to help. Have a great week. We'll see you again next week for another Woody's Weekly Wisdom. That's episode 16 in the bank. We'll see you again soon. Cheers.